Traders, good afternoon. It's TK, ReadySetFutures.com. It's the 18th of October, 2016, and this is your daily wrap-up for this afternoon. We've got 4 markets to cover and under 10 minutes to do it in, so here we go. Let's get started. Quickly, our headlines. We've got copper flushed out today down to our target of 2.09. Gold had a nice lift today right into its developing volume-weighted average price. Crude oil already broken the trend line we put on the chart yesterday thanks to a draw on the API inventory report this afternoon, and the ES lifted on more bad data. Let's get right into it, traders. On your screen is actually the gold market. I'm going to change that and we're going to bring up copper. Copper on the day. This is an hourly chart of copper. We have 2 volume profiles, as you can see, one back from July, one here most recently since September. Since copper traded up higher, even up here at $22.22, we've been talking about copper being low and trading lower. We had our first bit of encouragement last week when we saw price move back into these developing volume-weighted points of control and the volume-weighted average prices. And we had called the price target of 2.090 as our target, and I guess we just narrowly have not missed it, not traded there. But as you can see in today's action, this was the last bar of today, and it flushed right out almost into in a bidless sense, bringing up just a quick 5-minute chart so you can see that all the way down here from 2.10 down to 2.0915. That's a pretty big move in 5 minutes. As I said, reminiscent of just the bid being retracted. In any event, that's a big move today in the copper market. We're going to zoom back out here to the hourly, and you can see now we've re-entered this congestion zone, and that was our premise here, is that we were going to be entering back into this congestion zone before we chop around and then make a decision whether we are going to move lower. We continue to like copper lower, but you may like it otherwise. Let's move over to gold. Gold on the day had a bit of a lift, good $10 lift at one point on the day. You can see our developing volume-weighted average price here moving on down, trading coming within our value area boundary, the upper boundary now at 1269, the lower boundary at 1251, and today getting stuck right at the developing volume weighted average price and trading off of it, but gaining acceptance above the volume point of control down here at 1256. We like this market higher. We don't know when. If you've been listening to us, we've enjoyed some nice calls here in the gold market over the past month and a half or so. We had talked about this breaking below, and we talked about moving down here to the 70% retracement, and that's exactly what happened for us. So price now beginning to trade a bit higher, starting to gain acceptance, although as you can see we're developing a bit of a range, even tighter than this value area, maybe up at 1267 being the upper point. We still have a lot of wood to chop on the north end here. Not only that, but between our developing volume weighted average price and the upper value area boundary, we can expect quite a number of sellers, as well as this being quite a low volume node. It will act as some resistance and require some force to get through. So up day on gold. Tomorrow could be a down day, and we could continue to see price continue to chop around here between 1255 even down to 1250 and up to maybe possibly even 1270. Heading over to crude, yesterday we decided to get a little bold and we put a trend line on the chart. What happens every time you put a trend line on the chart? Yeah, it gets busted. Well, today was no difference in crude. I will tell you, crude is now trading in December as a front month. You guys that are trading this instrument on a regular basis probably already knew that. And you might have even switched over on Monday, trading December crude. So on the chart is December crude. It's also back adjusted. So, these prices that you see back in November and beyond, these are back adjusted. This is a volume profile that we put on the chart since the OPEC ministers' agreement to agree. We put our trend line on the chart after we had a number of reasons why we think this agreement to agree is going to just fade into history as the rest of that cartel's jawboning has. And today actually was beginning to shape up as not being any different. We can zoom in a bit here to our 5-minute chart. Off of the open, we faded right off of our new trend line and back into the volume point of control. As you see, it gained acceptance and then traded higher throughout the session and lifted big time on an enormous draw reported by the API. I believe it was like a 7 million barrel draw versus a 2.5 million barrel build expected. The EIA inventory report comes out tomorrow. Monday was a regular trading day, so tomorrow we're going to get the actual official number, and we'll see how it does. But oil right now just cresting over $50, $51, excuse me, in the December contract. The November contract trading just slightly over $50 a barrel. It being rollover week, you can expect quite a bit of volatility, quite a bit of chop in the market, but high volume has shifted to the December contract. Lastly, on the ES, and guys, we are making great time, I want to say. As you guys know, I had a trade on the board at 2141. I did not move it, and I was hopeful at the open here that I was going to see an entry into this market. You see, we reached up to 2139 and a half. No, excuse me, and 3/4 as our high. So nearly entered into the market, and I was not. Bit disappointed in that, but nonetheless, action today was all about these lower value area boundaries. If we can zoom out, just so I can show our new list. I know you guys who have been watching this prior understand this. We've got 2 volume profiles in this market that we believe are prescient and continue to be so. Don't worry about this trend line. I'll explain that in a minute. I'm not really sure why this charting package does this, but in any event, we've got 2 profiles on the chart. This one over here on the left from Brexit, the most recent one from Yellen and her hawkish hold. Prior to today, we showed a triangle here. Since we have broken below that and we actually retested the lower boundary of that triangle, I removed the lower apex, or the lower vertex, excuse me, of that triangle, and have now changed it into a trend line. That trend line, yeah, I'm gonna have to fix that. But anyway, you'll see it on the chart tomorrow. This, in my opinion, is now forming a downward trend channel, seeing as though we have broken through that apex, and I'm going to trade it as such, which means in my book I wait for a few different filters to be set, and so believe it or not, the momentum filter that I look at is no longer on, I should say, for my system and my short positioning. I still like this market short. I just don't know if we may see prices up here at 2150, 2155 before we regain our downward momentum. As you see, we have our 2 developing volume weighted average prices. They are beginning to converge. The most recent one, again, from the latest Fed announcement, and this longer one that's kind of coming into the left of your screen, again, that's from that Brexit profile, and that is trading at 2141 and a half. The important point to note is that the high volume point between these 2 profiles is coincident, and it's at 2153. So that's why I took the short off of the board. I didn't get the downward action I had expected today, and so I believe that we may actually be headed a little higher before we turn down south again. So 2153 would be a dynamite place for my entry, and so I'm going to remove my order. Hope for that, but if I get the momentum back in my direction, then I will absolutely get back on the board for a short. You guys trade what you want. This is what I have for you for today. If you guys like it, hit the like button. If you feel like you really like it, by all means subscribe. And if there are others in your social circle who you think may find value in this by all means, feel free to share the information. Traders, it's your money, it's your account, and that's your daily market wrap-up for the 18th of October, 2016. Best of luck tomorrow in the morning.